Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we're taking a closer look at recent statements attributed to Central Bank of Iraq leadership, specifically comments suggesting that there are no immediate plans to change the exchange rate, alongside a wave of strong reactions and speculations circulating across social media and commentary platforms. This is an important moment to pause, separate verified policy signals from opinion, and carefully analyze what this actually means for the Iraqi economy and for those closely following the Iraqi dinar. Let's begin with the core statement. The message attributed to the central bank leadership is clear in tone and intention. There is no current move to change the exchange rate, and stability remains the top priority. That language is not unusual in central banking. In fact, it reflects a consistent principle followed by monetary authorities worldwide. Exchange rate adjustments, especially in emerging economies like Iraq, are not made casually or in response to market rumors. They are typically the result of long-term structural improvements, macroeconomic stability, and coordination with fiscal authorities. When a central bank emphasizes stability, it is signaling several things at once. First, it is prioritizing control over inflation. Second, it is maintaining confidence in the domestic financial system. Third, it is avoiding abrupt shocks that could disrupt trade, investment, or public expectations. In Iraq's case, this is particularly important because the country is still navigating a complex economic landscape that includes oil dependency, public sector spending pressures, and ongoing financial reforms. Now, let's address the reactions quoted in the paragraph. Some commentators are expressing strong disagreement with the central bank's stance, even suggesting that leadership changes could follow if there is no movement on the exchange rate. Others are debating the internal structure of the Central Bank of Iraq, including the role of its board, its independence, and its relationships with international institutions. This is where it becomes essential to bring the discussion back to verifiable economic frameworks. The Central Bank of Iraq operates within a structured governance system. While it does coordinate with the government, it is designed to maintain a degree of independence in order to protect monetary policy from short-term political pressures. At the same time, Iraq does engage with global institutions such as the International Monetary Fund and the World Bank, particularly in areas related to financial reform, transparency, and economic stabilization. However, these relationships are advisory and cooperative in nature, not direct control mechanisms over daily policy decisions. The idea that an exchange rate change is being suppressed or delayed by internal conflict or external control is a narrative often seen in speculative communities. But it does not align with how modern central banking operates. Exchange rate policy is tied to measurable indicators such as foreign reserves, inflation rates, fiscal balance, and overall economic productivity. Iraq has made progress in some of these areas, particularly in building foreign currency reserves due to oil revenues. But structural challenges remain. For example, Iraq's economy is still heavily reliant on oil exports, which means government revenue and foreign currency inflows are vulnerable to global oil price fluctuations. Diversification efforts are ongoing, but they take time to produce measurable results. Additionally, the banking sector continues to undergo reforms aimed at improving compliance, reducing corruption risks, and increasing integration with the global financial system. Given this context, the central bank's cautious stance becomes more understandable. A sudden or premature adjustment of the exchange rate could introduce significant risks. It could lead to inflationary pressure, if not supported by productivity gains. It could disrupt imports and exports. It could also create instability in the domestic market if public expectations are not properly managed. Now, let's talk about the short-term implications of this situation. In the near term, the reaffirmation of exchange rate stability suggests that there will be no abrupt policy shifts. For Iraqi citizens and businesses, this provides a level of predictability. Prices, wages, and contracts can continue to be planned based on the current exchange framework. For investors and observers, it signals that the central bank is maintaining a conservative and risk-aware approach. At the same time, the presence of strong public and online speculation highlights a gap between official communication and public perception. This is not unique to Iraq. In many countries, economic policy becomes the subject of rumors, especially when it involves currency valuation. The key takeaway here is that official statements should carry significantly more weight than unverified commentary. Looking at the medium to long-term outlook, the focus remains on reform rather than sudden revaluation. Iraq has been working on modernizing its financial infrastructure, improving electronic payment systems, strengthening anti-money laundering frameworks, and enhancing transparency in banking operations. These steps are critical prerequisites for any meaningful shift in monetary policy. If, over time, Iraq successfully diversifies its economy, strengthens its institutions, and maintains stable growth, then gradual adjustments in exchange rate policy could become part of a broader economic strategy. However, such changes would likely be incremental and carefully managed, rather than sudden or dramatic. It's also important to address the idea of leadership changes within the central bank. While leadership transitions do happen in financial institutions, they are typically driven by political processes, performance evaluations, and broader policy directions, not solely by a single policy stance, like maintaining exchange rate stability. Predicting leadership changes based on disagreement with public expectations is speculative and should be treated with caution. From a broader perspective, what we are seeing here is a clash between expectation and policy reality. On one side, there are individuals hoping for rapid changes in the value of the Iraqi dinar. On the other side, there is a central bank emphasizing gradual reform and stability. Historically, in global financial systems, the latter approach has proven to be more sustainable. For those closely following the Iraqi dinar, the most responsible approach is to focus on credible economic indicators. These include GDP growth, inflation trends, foreign reserve levels, fiscal policy developments, and progress in structural reforms. These factors provide a much clearer picture of where the economy is heading than speculative commentary. It is also worth noting that currency value is not an isolated metric. It reflects the overall strength and productivity of an economy. A stronger currency typically comes as a result of increased exports, diversified industries, stable governance, and investor confidence. These are long-term achievements, not overnight events. In conclusion, the recent statement reinforcing exchange rate stability should be seen as a continuation of Iraq's cautious and reform-focused monetary policy. While opinions and speculation will continue to circulate, the underlying economic strategy appears to remain centered on stability, gradual progress, and risk management. For observers and followers of the Iraqi dinar, this is a reminder to prioritize verified information, maintain realistic expectations, and understand the broader economic context behind any policy decision. If you want to stay updated with accurate, responsible, and fact-based analysis of the Iraqi dinar and Iraq's economy, make sure to subscribe to the channel and like the video. And as always, remember that this content is for informational purposes only and should not be considered financial advice.